Hey everyone, and welcome to Market Psychology 101, where we try to find value in the markets when there's fear and to be cautious when there's greed. Today, we're going to be taking a look all around the markets at the different charts, crypto, the S&P, interest rates. That's where we're going to start out. Fear and greed index, of course, and excuse me, where we're starting out right now is U.S. inflation year over year. So right now, inflation shot up a little bit and the markets seem to be correcting a lot. I don't think that's why Bitcoin is having the big correction it does. A lot of people are talking about the ETF stuff being sell the news, and we are in extreme greed. We're overbought on the RSI. So corrections are natural to happen. And here at Market Psychology, what I want you guys to be able to do is kind of use some reverse psychology right now. When you're feeling like things are bad, if stuff's taking a 10% shift downwards, that's when you need to be excited about possibly buying in. So, right now, with the inflation rate going back up a bit, that seems kind of bearish in the medium term. But here's what I want to show you guys. As we zoom out here, obviously we know inflation was up really high and it's coming down. The Fed wants it to get to around 2%, and we're going to talk about rates in a second. It's not always as simple as just inflation is up, Fed keeps rates high, inflation starts to come down, cuts rates. Um, it's not always that simple. And for the sake of this channel, I don't want to get too much into the weeds. I want this channel to be for the new or casual, uh, light, medium risk investor, long term investor, not for traders, calls, puts, leverage, all those things. I want this to be a community that helps the new investor. Like, when is a good time to buy and hold? How do we define what's a good time and a good asset to buy and hold? So, if you were to go on TradingView and just type in inflation rate, it'd be one of the first things to pop up. And I encourage all of you to just play around in TradingView. Um, get really good at it as well as you can, because all these charts, the indicators, the algorithms, it'll really help you become a better investor. And it'll also show you when there's more value. We don't want to just exclusively go off price or the relative strength index. That doesn't always line up. We don't always want to just go purely off where's fear and greed, because we can stay in greed for a while as the price goes up. We do want to talk about, I think on this channel, mostly when are great times to buy in. When is it time to sell? I mean, that's up to you. Um, for me personally, I like selling if I can, after capital gains tax comes down a little bit, so I like to hold for at least a year. But hey, if you have an asset that runs 10, 20x, why wouldn't you sell it? Sometimes, if it's smacking you in the face, it may be okay to sell early, even with the tax. Anyways, inflation has gone up, so the markets seem to be correcting to that. And let's just take a look at some other ones. Unemployment rate, that one, if we zoom out, it is still curling upwards. It does seem to be having this U trend. This, of course, is 2020. It still seems to look like it's going up. And sometimes when we get into a recession, is when the unemployment spikes. So it can look this way until bad things actually happen. I mean, look at this. We were already in the 2009, and the markets were dumping back into here. So as the market started to dump, then inflation was going up. So or unemployment, sorry. So it's not always like you're always going to have indicators showing you right off the bat that, oh, now's a good time to buy. Another one I like to look at is the VIX divided by the VVIX. And if you did this opposite VVIX divided by the VIX, that would show you something different. So this is the volatility Index divided by the volatility of the volatility. I know it sounds like a lot, but here's the point. If you do VIX divided by VVIX, anytime we're dipping down here, that tends to be local market tops when the S&P is topped. Again, if you switched them, it would be the opposite. When we get up here, these tend to be good times to buy. 2008, when we're peaking up here, good times to buy. Just another indicator. This is just the VIX itself, it's the volatility. And one thing I noticed is that where it is down here lines up with where we were before the 2020 sell off, as well as before things spiked in 2008. So when the VIX does spike, if it ever is getting above 40, 35, and guys, I encourage you to compare, find out where these spikes are in correlation with the S&P or whatever asset you like, and see where the price is while the VIX is spiking. There's a strong correlation, but it might change depending on what it is. As far as the S&P, we've been in this uptrend ever since the 2008 crash. Here, let me put on a log. This will make more sense. We've been in an uptrend since 2008. From the bottom wicks, I have this uptrend. From the very bottoms, we've been bouncing off of this quite a bit, even September 22. So what are we doing this year? Guys, for myself personally, anytime I'm looking to buy, when I click the 1 year, I look where are prices right now. Is it at a yearly high, yearly low? If it's within the range of a yearly low, that's when I get excited. In the range of a yearly high, not as much. Now for the past month, we came down into the new year, went back up, seemed to be chopping around. Who knows what's going to happen? I have seen other people draw this wedge pattern as well, and some people are thinking that maybe we'll bounce around the 4,500 level before going up some more. We'll see. I'm not going to get into too much Elliott wave stuff here. Yes, patterns can emerge and show you some things, but it doesn't mean it has to. Patterns can break down. My goal, again, is to keep things simple for you. We're going to take a look at different indicators. For example, just simple, well, why didn't it load? Okay, well, my indicators aren't loading. The last time that happened, I had to restart my computer. Sorry about that. We're going to take a look at different indicators in my next video. I guess my computer's cache is built up too much. It doesn't like when I'm trying to do that. And we'll see. Yeah, nothing's working. We'll see with different indicators when it might be a good time to buy. For me personally, not so much. We're still really high in the RSI. And when we click on the different time frames, this will change the RSI. You'll see up here we have the weekly. We can go to monthly and all other sorts of things. So as far as the weekly, the RSI is still up here. When we're under 50 or we're touching the oversold area under 30, those are great times to buy overall. Now here, look, we were under 50, but then we still had a lower to go. So you have to be a long-term value-minded investor if you did buy up here just purely off RSI. Look how much you would have had to wait. A year and a half, so this isn't a game you want to play just exclusively buying off the RSI. I do like when it is oversold, and sometimes, hey, you're going to take losses, but you have to make your own judgments. If we're staying down here for a while, I was buying in this range as we were falling. Look at here, the RSI was going up. It was showing we were strengthening in the RSI, going down in price. That's hidden bullish divergence. And so back in here, I was really excited about buying. I was buying in here, really excited about buying. And there was quite a few stocks I liked even up through here that weren't following the S&P, that were just doing their own things. Stocks I really like. So again, let's go to the inflation rate. I think this is the one I was looking at. We have to take it off log to really see what it means. Fed's trying to get it down to 2. And so what that means is they're probably not cutting rates this month. They're going to hold higher for longer as much as they can. And if they and if this continues, they may not even cut rates in March. They're probably going to wait as long as they can until something in the economy is really broken in order to cut rates, but they don't want inflation to double spike like it did in the 70s. This is what they're worried about. So in the 70s, you can see we had these these 2 major waves, but looking at the charts, you do see, this buildup, the 3 giant peaks of inflation. We just came out of one very similar to this. And look, they never got under 5%. They had to raise rates a ton in order to get inflation down. And so let's see if I can find it. United States interest rates. This should be the one. Yes. So when inflation went up, the Fed also took rates and sent them to the moon. And I remember talking to my parents about when they got their house in the late 70s. They told me what the rates were. And I want to say they got theirs around 8%. Yeah, it was in 79 or something. It's around 8%. Can you imagine that nowadays? Now, yeah, we're somewhere around 6 or 7, but they got theirs around 8. And yes, houses back then, they were going for $50,000, something ridiculous like that, not 400 to 500,000. Excuse me. But when inflation double spiked, the Fed had to send rates to 20%. They're not going to do that today. Today is a little bit different with the value of the dollar. I don't want to get too much into the weeds, but anytime they hold rates for over 5 months, that tends to be the top of where the rates are. So I do not think they're going to continue to raise. I don't think this could be different than all the times before. I do think they're going to keep it at this 5.5% for as long as they can and then start to taper off. One thing to note, when rates come down, that isn't immediately good for the stock market. And that has historically been an opportunity to buy. So as you can see here, as they cut, that's when the S&P during this time started to crash. 2000, you can see the dates at the bottom here. 2000, when they started to cut. Later, that's when the dot-com bubble crashed. Look here, that 2019, same thing. There are a couple instances where that didn't happen. I want to say 87, there was that flash crash for some reason. And here, the flash crash that just came out of nowhere. There were some corrections back in here, but we don't need to go that far right now for the sake of keeping this video as short as possible. And guys, I want you all to know I'm trying to quicken things up. I'm doing my best, so apologies. But again, when rates cut, the market tends to correct. So let's line these up. January of 01, August of 07. We already know what happened in March of 2020. Where's March of 2020? Well, it's over here. So March 2020, that was when the market started crashing. We already know that. But August of 07 and January of 01, what was the S&P doing around that time? So January of 01, right here, right before the crash, as we were cutting rates, August of 07, right here, once we started cutting rates, down she went. So and obviously 2020, I mentioned the 70s before, guys, when we had the crazy inflation rates. When we did cut later, that last cut, there wasn't as much of a correction. There's something to note. This one was a little different. When there was the big inflation spike and the Fed raised rates through the roof, this was the correction we got. There's one of these. I believe it was this one. So this is the ruler where you can measure high to low. So, was it a good correction? Yeah, 20%. You should be buying anything around 20%, in my opinion. So the other ones were a lot bigger. I mean, look at these. Can you imagine? And here's the thing, look at this 50%. This one, 50. I know I didn't draw that exactly. 37%. Let's go back to the COVID crash, 30%. I mean, there's other ones in here too, but let's just go to the GFC, the Great Financial Crisis. Almost 60%. And then the dot-com bubble, when that burst, 50%. So here's the thing, guys. When you talk to some people, if you say anything like, yeah, maybe when rates cut, the market can tank. Let's just be conservative. Let's say 25%, even though in the past it's cut more. And look at that. It's kind of funny. I say 25%. It lines up with the bottom there. And hey, maybe that's possible that we get a double top and a double bottom. I think that would be a narrative that would pop up when rates do cut. We could drop 25% and the S&P goes to 3,500. I know I would be buying around that time, me personally. None of this financial advice. This is just my opinion. 30%, 3,350. What if we, oh my gosh, I have to zoom way out here. What if we went down 40%? High 2000s, 2,900, 50%. Where would that lead us? And this is kind of interesting. If you look way to the left, look over here. If we dropped 50%, what's interesting is look where that lines up. Isn't that kind of funny? Because that's what happened before with the Great Financial Crisis, that it went down a little bit deeper than the dot-com bubble crash. And in the 70s, as I just showed you, when that second correction happened, it went down deeper. So at worst, I think, at worst, this is what would happen, in my opinion, that we would retest these COVID lows back here. Now, I'm not saying that's going to happen. I don't know what's going to happen. I do know that any correction when the S&P is over 20% at any time, I am buying, because we might go down 20% like we did in 22, late 22, and do it again. Because, let me click off here. Because if we only go down here and do that again, who knows, maybe a head and shoulders pattern would form. So, and then we would have a big correction. If there was a head and shoulders, and then we would get something, around here, if we were to follow the patterns of a head and shoulder. So, we don't know what's going to happen. Those are just some things I'm looking for. And as far as crypto, let's just go over crypto as quick as we can. I've drawn a fib from the low to the previous high before. Let me make sure that I'm doing this right. I want to get this exact for you guys. So I'm going from the wicks. And so you can see what's interesting. We had this 382, and maybe my fibs aren't perfect, but it is interesting that with the ETF news, that we wicked up to the 382 and then boom, went down. let's get a more accurate look here. So I know yesterday we went into the 49,000 level. We got above that 382, and now we're coming back down to the this is zero point 0.5, right? Yeah, zero point 0.5. So we're coming back down to the 0.5. Guys, I think that anything under the 0.5 long term for the next mega bull run may be a deal crypto wise. Again, I could be wrong. If a another big recession were to happen, all these cryptos, you're going to be holding on to them for a while. So take your own risks. Do know that if we are to repeat in these 4-year cycles, let me zoom out a bit here, where we are dipped into the halving. That's what these lines are. They're the halvings. See? And then we peak. Whoa. Hate it when it does that. This website's so touchy with my finger mouse. Where we dip into the halving, peak, dip into the halving, peak. This is what people mean when they talk about the 4-year cycle. Dip into the halving, peak. People think that we're, again, dipping into the halving and there's going to be another peak over here. Maybe we're going to get high 100,000s, close to 200,000. That's what a lot of people's predictions are. Again, you don't want to get too caught up in predictions. You want to have a plan, increase your time in the market, and react when things meet your conditions. We can have another 4-year cycle type pattern. We can. However, if there is to be a recession that starts this year, then that's going to change things. Possibly. I mean, I guess we could moon go up in late 25 or early 26. Would that completely invalidate the 4-year cycle? Not really. It would just stretch out people's patience a lot, and that tends to be what happens. Markets like to do what we don't want them to do. By the way, fear and greed. We're still in the greed area. This is the altcoin season chart. I've talked about how after the 2017 bull run, you can see how we slowly went down, found a bottom. That top in 2019, it was around here. We may have just stopped in here and possibly will form another bottom before going up. Again, this is without a recession happening. Crypto, fear and greed. We were in extreme greed yesterday, 75 and above. Now that we've corrected, we're back down in the greed. Something to keep an eye on. So anything under this 0.5, I think long term could be a deal. As far as my buy zones, and you can see buy zone here. Yep, anything under 0.5 could be a deal. I would love if anything got under 37 and especially 27. For me personally, not financial advice. For me personally, I would really like to buy cryptos, depending on what the patterns say, depending on how much I like it. And again, for me, this is just extra play money. This isn't the bulk of my investment portfolio. 5-10% maybe. Again, any money you invest has to be money that you're willing to lose because you never know what's going to happen. So please don't go into this thinking that you're some brain genius like Stephen Hawking or Goodwill Hunting, that you've cracked the code, that you found a hidden secret, a pattern underneath the pattern, that you know it has to follow this pattern, then boom, it's going to go up, and you know exactly when to buy the bottom, sell the top. Guys, it's not that easy. Try to have a plan, and that's why I say dollar cost average into it. When prices meet your threshold. For me, I like it when it's in that yearly low zone. I like it when it's an asset I like, and especially when it's an asset I use. Crypto, it's not something I use yet. Is it something I like? Yeah, I think it has a lot of potential. And so that's why it's being talked about so much, because in the early days, the 2000s, late 90s, People are excited about Amazon. People are excited about Facebook, Google as we got into the 2000s, Tesla. A lot of those have already ran to extreme prices. So people are trying to think of what's the next big thing? Is it crypto? Nvidia is something that's already ran. Nvidia's already ran a ton. I got in on Nvidia near the bottom. I got lucky on that one. Same with another stock. And again, look at this. It's hard to find the bottom. Even though I was buying down here, doesn't mean that it wasn't going to go down this way. We never know when it's going to reverse. But I did like that it was close to the bottom of the RSI. I liked where the fear index was. That's why I took that opportunity. So we were looking at Bitcoin here. So I look at this and I compare it to back here. I'm going to draw a fib from the previous 4-year cycle low. It's not going to be exact. To the high. I'll try to get it as close as I can. And look, when we had that 2019 run, we went up to the 382. Look at that. Anytime we were under the 0.5, that wasn't a bad time to buy. It was an especially great time to buy when we were under the 618. And for a moment, we got under the 786. Who knows if this time how it's going to be different, because it is going to be different. So when I look from the previous low to the high, if we get under the 0.5, I don't think that's a bad opportunity for cryptos. I will look for it to get under the 618. I know a lot of people don't think it can happen, but you never know. If it does, I'm going to be very excited. And especially if it gets under the 786, if it gets under 27K at all, my opinion, I think that would be a great opportunity. Doesn't mean it has to happen. We don't know how quick this ETF stuff is going to impact the crypto market. As we were talking about with rate cuts, we don't know how quick that's going to impact the stock market. With inflation going higher, my opinion, I don't believe rate cuts are going to happen as soon as I thought. Rate cuts are probably going to be held out as long as they can. What makes this the most tricky is that it's an election year. And the longer rates are held up as high as they are, the more cracks are going to form in the economy. Because when rates are higher, companies have less money to borrow. Borrowing is at a premium. It's difficult to invest in R&D, housing, all those things. It makes things a lot tighter. And as we already saw, unemployment's slowly curling up. The job data, I take that with a grain of salt. So all this is just my 2 cents, guys. Fear and greed, we looked at this, right? I don't think I mentioned this, though, but I did it in my last video. I was wondering if the ETF would spike it to the mid-80s. We didn't quite get there, possibly yet. But each 4-year cycle, things are less volatile and there is diminished returns. And so I wasn't looking for it to get as high. Maybe this is as high as the greed goes for Bitcoin so far. And if it gets down under the 30s, the 20s, yeah, I'm going to be looking at buying. So guys, market psychology. You need to try to think like a contrarian and get excited. If you like crypto, if you like a stock, let's pull up any stock. Tesla. I don't like Tesla. It doesn't mean you don't have to. The reason I don't like Tesla, its revenue is half of Ford, yet the market cap is almost 15 to 20 times more than Ford. I think Ford is around 40 billion market cap. That's why I don't like Tesla. I think during the next recession, Tesla will be one of the magnificent 7 stocks to tank hard. That is my opinion. We will see what happens. Tesla getting a little bit of a correction here. If you look at the highs, we were up to 415. If you believe in Tesla, you might not think this is the worst time to buy if you believe in it. Again, maybe some of you know more about Tesla than I do. If you do and you like the stock, you use it in some capacity, you have a car, you think their company's forward thinking, heck, this isn't the worst time to buy long term. And if there is a recession and Tesla goes down to the low 100s, yeah, maybe that's an even better time to buy. Again, I look at other things with the numbers too. The revenue is half of that of Ford. Now, Ford's stock is just awful. And I remember learning why uh, a little bit ago, but it's been awful for a while. I mean, look at this. Let's click the L button. You could have bought at 250 and, you know, made a 15x from the 70s to what's it done since the dot-com crash? Look at this, great financial crisis. A 10x. That's, yeah, Ford stock has sucked. But look at this. 45 billion market cap. And Tesla, something like 600. That's why I like things like Amazon. Amazon's a product I like. It's a product I use. This was the dot-com bubble. I remember people were dumping on Amazon back then. I was listening to the radio with my dad. Remember the radio? Amazon took a 95% drop. Imagine buying Amazon at under 30 cents when it's worth 160 now. So this is what I'm telling you guys. This is a great financial crisis. What was the drop of Amazon from the previous? Let's just go from, over 50%. Can you imagine Amazon being 50% off if we were to get a correction? I'm still mad at myself for not getting more Amazon stock late 22. Hey, look at that. It was 50%. I was waiting for it to touch under 80, and I still feel like an idiot for it, and it's okay if you think I am one. I would agree when it comes to this. We ran up so much when rates were nothing and they injected all that money into the economy. We ran up so much. And so I thought that maybe it would get under 80, and when it was going to get under 80, I was going to buy the hell out of this. And of course, it just kind of bounced off 81, 82. 80 was a strong psychological level, and all the max value people like myself missed out on that one. So you don't have to buy the exact bottom, guys. Don't make the mistake I did. You could have bought in under 90, and that would have been just fine. I mean, 90, it was already down 50%. That's great. So if Amazon were to get around these levels again, under 100, heck, I'd be hard pressed not to feel like that was a juicy opportunity. So if there are any stocks, cryptos you would like for me to take a look at, please let me know. More than happy to look at anything for you guys. Hope you're enjoying these videos, hearing me just kind of share my thoughts about the market, all things going on with stocks, crypto. Right now, it looks like we are getting into some corrective territories. There are some stocks that I didn't look at today that do look like decent values, but we will see. We will see. Once they cut rates, I'm going to be telling all of you, start the timer, because the bottom will be coming. On average, it's 7 months after the first rate cut, but you never know. It could be a year or 2 years after. Anyways, hope you enjoyed this video. Guys, I have worked in the field of psychology for a while, and I've used my knowledge and experience in that field with investing, and it's done well for me to ignore the news, or actually consider the news, but sort of do the opposite of what the news says. When the news is excited about stocks, I'm cautious. When there's a lot of fear, that's when I'm feeling greedy. That's why I'm feeling opportunistic. And so don't always follow the hype that you see on the news, see and hear on the news. None of this is financial advice. This is just my opinion. This is just for entertainment, educational entertainment purposes only. You're taking all your own risks. And I hope this channel will help grow a community where people will take smarter risks, will look at the stocks in a smarter way. And this is one reason I made this channel, guys. I hate seeing people lose their money. I know quite a few people who have gotten liquidated making bad decisions, and that hurts me. That hurts me in my soul because these are people I care about, and I don't want that to happen to you. I don't want that to happen to anybody. So please make smart decisions. Talk to a financial advisor. Don't just take the opinions of someone on YouTube. And I hope you all make money in the long run. I really do. We're all in this together. So take care, guys. I'll try to get a couple videos out this weekend. Thank you all for watching and liking the videos. That means a lot. I'm just doing this for myself, not doing this to make money. Obviously, if this does someday, cool. But really, I'm just doing this for myself and for fun and to share any knowledge I have with you guys and hopefully grow a community. So take care, everyone. Have a good day.